Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Round one goes to Le Pen. The National Rally takes the lead in the first round of the French snap elections. But can the far right win a majority? We'll break down the market reaction. In the UK, Labour maintains a 20-point poll lead as election campaigning enters its final 3 days. Leader Keir Starmer tells Bloomberg his priority will be growing the economy. Plus, Joe Biden vows to stay in the race despite calls for him to quit after his debate performance against Donald Trump.
In the meantime, a quick check on these markets. Green across the screen when you're looking at the currency picture, the equities picture as well. Futures higher by a whopping 1.8% on the Euro Stoxx 50 futures. FTSE 100 as well, higher by 0.4%. The currencies gaining some strength. 107.59 on euro dollar, 126.69 on cable. The countdown to the opening trade starts right now.
Monday, the 1st of July. Welcome to the second half of the year. Welcome to our new show. Welcome to our new look. We hope you like it. We certainly do.
Yes, it's very nice to be around a proper desk,
yes.
I'll say, for starters. The opening trade, how long will it take us to get used to the new name of the show? I don't know. Who will be the first among us to get the name wrong? I'm certainly volunteering myself for this task.
I had to repeat it over and over and over again, but we'll get the hang of it. It's a good set. We're off to a roll.
No, it's a great set. We're going to do a lot with it. We're going to get some great guests around this table, and we've got a lot to talk about. Ironically, despite the fact it is the opening trade, I think our first week is going to be dominated by politics.
Yes, it's that interplay between politics and where markets go that might set the opening trade, and certainly that is the case for France today. So let's go certainly to the French story. The story is, as we said in our headlines, Le Pen, the National Rally, they did do better than anybody else. That is the story. The story is also that Le Pen's support increased in nearly every city, town and village in France, according to some deep dive analysis by Bloomberg. But from a market's perspective, the story is that she didn't do quite as well as she might have done, and maybe the left didn't do better than it could have done. And therefore, as a result of that, if neither of them are going to win a majority, there's a little bit of relief in the markets. And that's what we see. We've got a chart that shows that the CAC futures are looking positive. The euro is bouncing a little this morning, and that's where the conversation starts.
The idea that gridlock is good for the markets. This is a theme we hear over and over again, specifically when it comes to those spending concerns. We don't want the deficit to go further. How many notes have we seen where either the left comes to power, the right comes to power, and suddenly the deficit goes into free fall, only grows? Now, it looks like that sigh of relief is really related more to that.
The CAC here, I see a red head across the screen this morning. It called 2.8% higher. So we are going to get something of a bounce this morning. It doesn't feel like a Bardella bounce yet, but I think the second round looks very hard to call at this stage.
And it's very interesting. We set ourselves up for 2 days where Macron and the left are going to be talking about those three-way runoffs. How much can they, will they decide to cooperate? And that's something the market will watch closely.
We've got an election coming up in the UK. You may not have noticed. It's going to be happening later on this week. I don't think that's the main event this week.
No.
In the UK.
It certainly wasn't yesterday.
It certainly wasn't yesterday evening. And you look at the front pages this morning, dominated by the football. I think the main event this week is going to be on Saturday, and it's going to be against Switzerland. And it's going to be the quarterfinals in the Euros. So
who are you rooting for?
Who am I? Not Switzerland. Let's put it that way. I apologise to the Swiss, but I think you've got the better chance in this game coming up. But I think also this election is interesting in as much as I'm not sure it's about. I think from a politics point of view, I'm not sure it's about the Labour Party. I think it's about removing the Tories from government. I think it's about reform and how well reform does. I think from the market point of view, I think the size of the majority might matter. If the Labour Party do get a big thumping majority, maybe they can do something with it to get the growth story going. And there's a great piece by Anna Andrade and Dan Hansen about that on the Bloomberg terminal this morning.
Yeah, I think that takes us to the, when does it matter to markets when governments can do a lot? When does it matter to markets when governments can't do much? And that takes us back to the French story you were referencing.
It does, and I still think in the context of all this, we talked about the strength in the euro this morning. Cable has been the continuous outperformer. You have seen some folks even on this very show calling it a safe haven from the EM story, which is so interesting because that is where we hear so much of the dollar story as well. And I think that brings me to, we have to talk about the Biden fallout here. I mean, we watched this debate. I was in at 2 a.m. on Friday, keeping an eye on it. And to see in 48 hours the frenzy around the possibility of Biden actually getting removed from this ballot has really just gone AWOL.
It's amazing. The Journal's got an op-ed piece this morning saying they should both step down, and that would certainly be interesting. But I think we don't know how this story is going to turn out yet. We've got until obviously August. They've got some big decisions to make in the Democratic Party, but this is so consequential. If we were to see a younger opposition for Donald Trump in terms of the election in November, I think the markets really have to readjust quite significantly to that, and the possibility that the Democrats do retain office, I think, is hugely significant.
Yeah, there's certainly still a lot of things we do not know about the way that November is going to play out. And in the very short term, the Biden team, as you point out, Kriti, pointing to the amount of money that they've been raising. They've been raising money since Friday morning into Friday evening, over the weekend, still in the name of Joe Biden. And so still trying to put speculation about whether any of these faces on the screen right now will step forward instead.
And all 5 of those faces on the screen have really rallied, to your point, around. I think the next key dates are important here because the Democratic convention is coming August 19th. Prior to that, you have some electoral ballots where basically you need to have the name solidified. Ohio is the earliest. It's August 7th, which means that the presumptive nominee has to be basically, in theory, tied down before then. The question is, how do you do it? And it's being done through a virtual roll call, which, again, the timing is TBD. So if there is any sort of prospect of changing or swapping out a candidate, which at the moment there isn't because President Biden has the electoral votes he needs and isn't going to be stepping down, that's where you're going to see any sort of pushback. But again, the clock is ticking. We're about 6 weeks away from that.
Yeah, this weekend was a frenzy. I don't suspect that the frenzy is going to subside this week. It does feel as if this is a story that has momentum. A decision has to be made one way or the other. Get behind Biden or get behind somebody else. That is the kind of the binary choice right now. Which way we go, I think it's really difficult to decide. Politics certainly in flux on both sides of the Atlantic. Let's stick with what we're watching here, certainly from our side of the Atlantic, and that is the French story. CAC futures are higher. The euro is higher this morning. Why? Marine Le Pen's national rally won the first round in the French parliamentary elections, but by a smaller majority than some polls had indicated.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power.
Tonight, I call on every French person attached to their freedom to the remedying of France to join me and amplify the dynamic and make the national union win against those who want to divide us.
Our instructions are simple, direct, and clear. Not one more vote, not one more seat for the national rally.
Market's kind of seeing what it wants to see this morning, and that is a positive story. But how really can we call what happens next weekend after we've seen what happened this last weekend? Well, let's try and get some assessment of what the situation looks like. Bloomberg's Caroline Conan joins us now from the French National Assembly in Paris. Caroline, first of all, walk us through the numbers from the first round.
The far right clearly dominated this first round with 33%. However, it was slightly below than our last poll of polls that was published on Friday. So not as good as expected as a performance for the far right. Second position with the New Popular Front, this union of the left, with 28%. And third, Macron didn't do as bad as expected with 21% for Macron and his allies. Now, everything will depend on whether Macron and the left pull some candidates out of the race in the second round, because what's going on right now is historical. You have more than half of the constituencies where you have a three-way contest on July 7. If you remember last time in 2022, there was only 8 of them where you had a three-way contest. So clearly that will all depend on whether the candidates who came third actually withdraw from the race in order to block the national rally. That is what the far left of Jean-Luc Mélenchon has called for. That is what the socialist of Raphaël Glucksmann has called for. And that is also what the former Prime Minister Edouard Philippe has called for, even though he did say that in some cases when you had a candidate from the actual far left within the Union of the Left is also present in the second round. In that case, they would stay with another candidate and remain, and that race would remain a three-way contest. So a lot will depend on those alliances. The candidates have until tomorrow, Tuesday, 6 p.m. French time, time, 5 p.m. UK time, to tell whether they actually run or not in this runoff. And that will actually potentially change the outcome of this second round.
More triangles than one-on-ones, maybe, than we would normally expect. Caroline Conan, thank you very much indeed. Caroline Conan outside the French National Assembly. We'll be back to her a little bit later on. We've got plenty coming up on the rest of the show. We'll give you an idea of what's going on. We're going to be live in Paris throughout the programme, breaking down the first round of the French election results. Nicolas Bouzou is going to be joining us, founder of the consulting firm Asteris. He's going to discuss what it means for the French assets. We're also going to be talking about those with Delphine Arnault from Edmond de Rothschild. Peter Dixon from Fitch Solutions is going to be joining us. We're going to talk about the French economy and how it fits in to the Eurozone story. Plus, Bank of America Merrill Lynch's Sebastian Redler is joining us at the Open to talk about all things equities here in Europe. We've got a busy week.
We have a very, very busy week. That's just the guest lineup, and that doesn't even scratch the surface of what we've got for the rest of the week. But in terms of the actual data, we've already talked about the elections, but we also have the ECB forum in Sintra kicking off today as well. Plenty of data on both sides of the Atlantic. We've got Euro area CPI, for example, tomorrow. You've got PPI numbers coming out on Thursday, June meeting minutes on Wednesday as well. Do we start to see that divergence between the Federal Reserve? For me, I think what's interesting, despite all of the election talk, all of the ECB or ECB data, or relevant data for the ECB, is also going to be that on Thursday, and this is, Anna, to your point, in light of Independence Day in the States, where markets will be closed, I'm rebelling on my own, and bringing to everyone's attention that on Thursday, the EV tariffs from the EU onto China do actually kick in. There is still some talk of some sort of 11th hour deal, but that does get in place on Thursday, which is convenient because the markets in the States will be closed.
There is just too much happening this week to fit on one graphic. That is what we conclude from our conversations before the show. But you're right to mention the EV tariffs. I'm interested in, well, all of it. But Sintra stands out at the beginning of the week, doesn't it? Christine Lagarde's going to be speaking there today. And all of that in the run-up to the inflation data that we're going to get out of the Eurozone just tomorrow. So that's going to be a focus. And, of course, the jobs data a little bit later on. We'll focus on that.
Yeah, the macro data feels like it's, though, playing second fiddle to the politics, which I think is interesting. We spent the whole of this year, the whole first half of this year, just spending our time speculating about which central bank's going to go when, how are they going to raise, how are they going to cut, what's going to be going on. Now feels like politics has firmly taken over from that narrative, and what governments are going to do and government spend is going to look like. Critical for the second half. Yeah, absolutely. So the relationship between markets and politics will be something of a theme for us, no doubt, for the whole of Bloomberg and for all those involved in markets during 2024. But certainly on this programme, we'll be returning to that theme. Here are some other corporate stories that you need to know about this morning. Bloomberg understands that the US Justice Department will charge Boeing with criminal fraud over 2 fatal 737 MAX crashes. The plane maker has until the end of the week to decide whether to plead guilty or risk going to trial. Meanwhile, Boeing has agreed to buy Spirit Aerosystems in an all-stock deal that values the company at $4.7 billion. BlackRock is buying private capital database provider Preqin for about $3.2 billion in cash. BlackRock says it expects to close the deal before year-end. Preqin founder Mark O'Hare will join BlackRock as a vice chair after the deal closes. Preqin competes with Bloomberg LP, the parent company of Bloomberg News. And Atos creditors have reached an agreement that will see them take control of the embattled French IT services company instead of an outside investor. Bondholders and lenders have agreed to convert almost €3 billion of loans and bonds into equity, as well as provide new debt and inject new equity. What have we got coming up for you? The BVA chair has been speaking to Kriti. We're going to get thoughts on banking, we're going to get thoughts on consolidation, we're going to get thoughts on what happens with the macro picture. Plus, of course, Kriti was mentioning this as well, President Joe Biden vows to stay in the race. We're going to we'll look ahead to more politics. It's a week of politics. So that is going to be front and centre. And that takes us to our top story. We'll be back there in just a moment. France looking poised for change. How are the markets going to take it? So far, so good. You want to join the debate? You want to join our conversations? You want to tell us what you think of our new set? You can do all of that. IB Plus, BB TV Go is the function. We'll see you in a moment. This is Bloomberg.
Welcome back, everybody. We still have 43 minutes to go until the start of European equity trading, and we'll certainly keep an eye on French assets. CAC futures pointing significantly higher this morning. You can see them up by 2.7%. In terms of where bond markets are, we've had bond markets opening up then, and we do see that at the longer end of the French curve, we do see those yields coming down, and we see the France-Germany 10-year spread falling to a 2-week low, this after the events of the weekend. So, yes, Le Pen did better than everybody else, but perhaps not as well as some thought she might. Certainly the polls on Friday, and so as a result of that we see a little bit of a risk rally this morning. The front end of the curve, though, it doesn't look quite so clear what the picture is. Let's talk about what this tells us about appetite for French assets and risk this morning. Peter Dixon joins us, head of EMEA country risk at Fitch Solutions. So in that sense, the perfect person to talk to about risk on the Monday after the first round of the French elections. Peter, very nice to see you this morning. What do we say about risk appetite? French stocks set to go higher. The euro is higher. There does seem to be appetite at the long end for French debt. So, you know, maybe there's a risk-on theme there. What is that in response to? Is it that Le Pen didn't do as well as she could have done? The left, their performance has been in focus, and more so for some market participants. So what do you read into this reaction?
Yeah, I mean, I think you're right. You said it there. It's a bit of a relief rally in a sense, because maybe Le Pen or the RN didn't do quite as well as many people expected. There's certainly talk now of the centrists and the left trying to do their best to block the RN out of the out of Parliament, which I suppose is going to give investors some hope. It's not necessarily good for French democracy, and of course I think that will cause bigger problems down the line. But in terms of where we are now, and in terms of what we've got to look forward to next week, I think markets are hoping that it will not be an RN-led government, and I think that's giving them some succor at the moment.
And that is the key question this morning, isn't it? Whether she is going to be, whether Le Pen and Bardella and co are going to be able to get a majority. That is obviously the key question. When you look at the path forward from here, then between round one and round two, what is it that the market really wants to see, Peter? Is it any sign that leadership is going to be put in place that will deal with the deficit? And if that is not likely, what will markets want to see?
Well, that would be nice, but I don't think that's going to happen. When I think over the course of the next few weeks, or days rather, markets are going to be looking at the extent to which the leftists and the centrists managed to sort of tie up the French election second round in a bid to keep RN out. That, I think, is the one thing they're going to be looking at. They're going to be reacting, I think, quite favourably.
Even if that gives a bit more voice to the left, the far left, I mean, which to some degree, you know, depending on what they ask for, I suppose.
I think that's a fair point. I mean, I think it's going to sort of help them in a sense in the short term. But I think it's perhaps one of these things about being careful what you wish for, because obviously in the longer term, if we have a very strong leftist influence on the French government, what that means for France as a business location probably isn't going to go down very well with the markets at all.
So when then it comes to, if we are headed for gridlock, indeed, or a hung parliament, as they'll say, what are the risks in terms of actually tackling things like the deficit if no one can agree?
Well, I mean, you could say this has been an ongoing problem for years and years. Macron clearly understands that is the thing that needs to be done. He's tried it. I guess he's failed. He needs to ensure that the government needs to ensure that the public sector is reduced in terms of its size. The retirement age increase, which is questionable whether it would actually be enacted, I think is certainly something which needs to go back onto the agenda. And pensions, public sector pensions, are certainly something which really need to be tackled. But, you know, frankly, good luck with getting that done. And I think the problem then is you get to a situation where you do get this gridlock. France continues to muddle through. But it continues to put strain on the rest of the EU. And, of course, the rest of the EU will be looking at France, particularly Germany, and saying, well, actually, if you guys can't get your act together, this is not necessarily good for us.
So when it comes then, I mean, you mentioned the pension reform as kind of one effort to tackle the deficit. It feels like there's more sensitivity in France than I've seen in several of the other countries. Where else are the pockets to address the deficit that are perhaps a little bit more likely than that pension reform?
I think the one thing that France needs in the short term is in the long term as well, is efforts to boost investment, is to boost productivity in a bid to boost growth. Because if you look at the growth per head numbers over the course of the last 15 years since the global financial crisis, they've been pretty dismal. But unfortunately, that's a problem, I think, across the whole of Europe. We really need to see productivity-enhancing measures put in place. Now, there are some who would say, maybe AI is the future. I'm not so sure about that. Maybe it is, maybe it isn't. But we need to see some kind of productivity revolution which is going to kickstart the economy in a way that we haven't seen for the last 15 years.
I think if the UK voted this morning, it would vote for Jude Bellingham. But I think the UK...
Is he on the ballot, Guy? Let's not misinform the audience.
OK, that's what I said if it voted this morning. It's going to vote on Thursday. The election from a political point of view actually feels less about the Labour Party and more about getting the Tories and how well reform does. But from a market point of view, from an economic point of view, the size of the Labour majority could matter, will matter. If it's big, the Labour Party has room to do things. And I'm wondering how much rope the Labour Party will have if it does have that big majority from markets. Could they rewrite the fiscal rules? Could they invest more? Could we be about to see an investment boom in the UK? Are we missing the story this week out of the UK because we're focusing elsewhere?
I think that, again, like France, the UK story is going to unfold over a long period of time. To your point about the size of the majority, I mean, I think it all depends upon how bold the government wants to be. Because if you think back to 1997, Blair had a huge majority. Arguably, he wasn't perhaps bold enough in some of the things he wanted to do. And I rather get the sense that the Labour Party this time around will be very similar. Don't forget that they've ruled out things like hiking any of the main tax rates, which I think is going to constrain them hugely. So it really is going to be a case of they need to think very carefully about how to rethink.
If they rewrote the fiscal rules, there's a number of ways they could do this. And Dan Hansen and Aaron Andrade have written a brilliant piece on this morning. There's various ways you could make the fiscal rules look better. You could include the Bank of England assets in the same way. You could look at maybe liquid assets. There's various ways you can change the way that the fiscal rules work. How much tolerance would there be for a rewriting of those rules, do you think? To give the government more room?
Yeah, I mean, I think certainly from a market perspective, they would quite like the idea of using the balance sheet a bit more effectively than the governments have done up to now. Don't forget, this is something which has been kicked around for quite some time, and no government has ever actually done it yet, at least not in the UK. So certainly I think there's an appetite for it. It's been well flagged. Markets wouldn't necessarily be averse to the idea, largely because it's a creative solution to the straitjacket which Labour has placed upon itself.
Peter, how long do you think the Labour Party, if they do win, as the polls suggest they can on Thursday, how long before we need to see the detail of what their growth plan means? Because they're promising a lot of growth, they're relying on a lot of growth.
Good luck with that. I mean, I think, but the markets really need to see something fairly quickly. When I would give them until, September, October, give it until the time of the next party conference. Then we'll see what they're made of. But, as of now, the manifesto looks extremely cautious. There's very little need to excite the markets from an economics point of view. And so it's going to be a case of, hopefully they've got something up their sleeve to get going, if not on day one, then certainly very quickly.
Where do you get a sense of where the growth might come from? I mean, we were talking last week, it can't all be house building. That delivers over a long period as well.
No, I mean, again, as we said in the context of France, I mean, I think this is all about micro-reform. And I think, unfortunately, European governments can't just, flick the switch and things will automatically return to the path they were on pre-2008. This is a case of actually doing things like reforming the tax system, which takes years. It'll take many years for that even to go through Parliament. It's about making companies want to invest more. A lot of work has already been done on that, but a lot more still to go.
OK, Peter, thank you very much. Thanks for joining us. Peter Dixon, head of EMEA Country Risk at Fitch Solutions. Thank you very much for coming in around this brand new desk we have this morning. Coming up on the programme, we'll return to the French politics. All eyes on France this morning and on French assets, on Eurozone assets to some degree, as the national rally wins the first round of the elections. We're live in Paris. That is next. This is Bloomberg.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power. We warmly thank the voters and welcome this result. This first step towards choosing an alternative is a mark of confidence which honors and obliges us.
Tonight, I call on every French person attached to their freedom to the remedying of France to join me and amplify the dynamic and make the national union win against those who want to divide us, damage the public order and flout our values.
Some of the political reaction there from the first round of voting in the snap French elections. A positive surprise when you look at the markets. You're seeing a massive rally, but it looks like gridlock, Guy, is a good thing.
From a market point of view, we didn't get the extremes in the French election, I think, in the first round. The problem is, though, that you don't know what the second round looks like. We don't know, as Karen was pointing out, how some of these races are going to go. You're getting a bounce this morning in French assets. How long does that bounce last for?
Yes, absolutely. Initial relief rally evident in CAC futures, in the euro, in the bond markets, at the long end at least. But if the left is going to be now in discussions with Macron in hundreds of constituencies, in hundreds of seats around France, what is the left going to be asking for, the far left going to be asking for to step away, or what deals will Macron have to do if his party is stepping away? That is going to be something that the market focuses on really intensely.
It's going to be an interesting week. I think it's going to be a really bumpy week. And I think, to Karen's point a little bit earlier on, we're going to know how some of these races are going to work. Are they going to be one-on-ones, or are they going to be these triangular votes that are likely to be much harder to call in terms of what we're looking at in terms of next week's vote? So, yeah, how much have we learned? I'm not sure we've learned a lot. So far, so good, but I think that's the best you could probably say so far.
Shall we just talk very quickly about some of the kind of sticking points? Pension reform is, of course, one of them. We were just talking to Peter Dixon about it. Tax raises, the left really pushing on that as well. One that, by the way, on the right, you have a change in minimum wage, which also creates tensions with what you're getting with the broader European Commission. I think we're going to hit that later in the show as well. There are a lot of cross dynamics here. In terms of policy, there's no clear picture.
Yes, exactly. And that goes back to that point about what the left will ask for if they're in conversations. You know, taxes on the wealthy is going to be something that the far left has been standing on for many, many years in France, something that Macron has pushed back against. We'll see how that develops over the next week or so.
We don't know yet, would be the big takeaway. UK politics looks really clear this week. In some ways, we don't know how reform's going to do. We don't know how the Liberal Democrats are going to do. We know the Tories are going to leave government. The French election, very hard to call. And US politics, really up in the air as well at the moment. But let's focus on what is happening in France. We need to get some more analysis on what is going on. Let's go back to the French National Assembly. Let's go back to Bloomberg's Karen Conan.
And I'm joined by an economist and founder of the consulting firm Asteres. He's Nicolas Bouzou. Nicolas Bouzou, good morning.
Good morning.
Were you surprised by those results in the first round last night? And what does it change for the second round?
No, I'm not surprised at all, because it is conformed to what we saw in the polls during last week. So we know that the National Front, far right, is very high. Jordan Bardella, the leader of the far right, is very popular here in France, so they are very strong. I think that the main political subject of the week will be the alliance between the Macron party, the majority, and the left, because Macron said yesterday night that he was in favor of alliance with moderate left to block the possibilities that the far right has a vast majority, an absolute majority at the French Parliament next week. So we'll have to observe, to watch this political game this week, and it's very open. I'm sorry, but I cannot say what will be the majority at the French Parliament next week. It will depend on the political game this week.
As you were mentioning, there's going to be a lot of three-way contest. The candidates have until Tuesday, 6 p.m. French time, tomorrow, to see who is going to run in the runoff. Do you think, actually, that even if the National Rally doesn't get these 289 seats that represent the majority, do you think Macron still has to choose Jordan Bardella as Prime Minister if he gets, let's say, 260 or 270?
Basically, President Macron will not have the choice, because even if the far right has, just say, 270 MPs, he will be the leading force in the parliament, and President Macron won't be able to choose someone else from Jordan Bardella. So it's we can have
because that seems like that's what the market is pricing in this morning, a possibility that there's not going to be a national rally government next week.
Absolute majority for the far right is possible. The step is very high, but it's possible. But you're right. I think that the most probable, the most likely configuration next week is far right with just say 260 and 270 MPs.
You don't believe in a technocratic government. Do you believe in that scenario? I had a guest earlier on who was telling me there's a possibility that we're going to see a Mario Draghi type of government, very technocratic, just to kind of get things going over the next 3 years.
Maybe I fail, but I think that it's totally impossible in France, because France is a very political country, and the political field is very cleaved, it's very tough, and the French population is very passionate. And just to say, if you are talking from Mario Draghi, maybe the French equivalent would be François Villeray-Gallo, who is the chief of the Banque de France, or Pascal Lamy. But seriously, you believe that if Pascal Lamy or François Villeray-Gallo is at the head of the French government, the far right or the far left will say, okay, we let him govern as he wants? No, it's impossible. So I don't believe in that. I think that we have two possibilities next week: far right government with a vast majority, or an alliance, a very unstable alliance, and maybe another dissolution in 1 year.
In 1 year, because as we know, the president cannot call new elections for another year.
Exactly.
So, Nicolas Bouzou, are we actually facing what Bruno Le Maire has been warning, a Liz Truss moment in France, or could we actually see the ECB intervene?
It depends on what will be done next week and for the budget, for the next budget. But just look, if the far right has a majority, in their plan they have the cancelling of the pension reform and the reverse from legal retirement age from 64 to 62. It's economically and financially, it's a madness. If they do that, yes, it's possible to have a Liz Truss moment with a surging of the French interest rate and a bond market that will be very nervous. And so yes. Yeah, sure. Bruno Le Maire is right.
When do you actually see a rebound, possible rebound of the French bond market? Are we going to see investors worried for another 3 weeks, or is it going to be resolved next week?
No, it won't be resolved next week, because we are in a very unstable situation, and we don't know what will be the political action of the next government, even if it's a far-right government, because their program is not very clear, because Jordan Bardella came back on many proposals that he made in the past 2 years. So it's very blurry, but I want to say something to the foreign investors. Don't leave France, because France is a very versatile country, and we are in a very complex situation here. But in 2 years, maybe things will be in order, because French people can change their mind. So.
Very quickly, we're in front of the National Assembly. You've got this Paris 2024 sign. Do you think that Macron himself has killed the economic benefits of the Olympics?
I hope that it's not the case. No, I think that it's a very good organization. I think that France has many flaws, but we know how to organize events like the Olympic Games. So I want to believe that it will be great, and that we will enjoy many economic benefits.
let's see if we can enjoy some economic benefits from the Olympics after this very uncertain French elections. Second round next Sunday.
Caroline Conan with the perfect last question. Thank you very much indeed. We'll have more from Caroline a little bit later on in the programme. The reason I say it's a perfect segue into our next conversation is while she's been speaking, we have seen Air France KLM come out with an effective warning. And the thing that stands out within that warning is what is happening around the Olympics. Ben Smith, the CEO of the business today, saying international markets show a significant avoidance of Paris. This is because of the Olympics. People are not coming to Paris because of the Olympics.
That's incredible.
That's incredible, isn't it?
It really is incredible. I mean, I can think of reasons why that might be. If things are very expensive, and if you weren't going to Paris for that, you wanted to go to see, you know, the Eiffel Tower and other things. Why go during the Olympics? But I'm still surprised. I was reminding myself of what we heard from the CEO of Accor, the hotel group, recently, and he was saying that Paris hotels are 85% booked for the Olympics. Hotel room prices, he told us, didn't go through the roof, and he thought the games were going to be extraordinary. So we'll see how that. We'll see where the wins are, essentially, from this.
Well, the Olympics always, just by itself, without the political uncertainty, have always been a little bit of a question mark. They can sometimes break even. You've seen previous Olympics not always be the massive tourism winner that I think a lot of people expect. On top of that warning coming out of Air France, Barclays coming out, I believe, on Friday, already putting the company at risk, and they're expecting their earnings to get hurt, again, because of that political instability. Look, I'm American. I'm excited about the Olympics. I'll go, but you're right. I'm not excited about the price tag.
But if you were going to if you didn't want to go to the Olympics, but you wanted to go to Paris, you would wait, wouldn't you?
I would wait, but the Olympics are only, what, 2 weeks?
Precisely,
right.
Precisely.
Does it make that much of a difference for the rest of the summer kind of travel there?
Everything's on the margin. You guide to this, it doesn't quite happen. You therefore see some disappointment. Pressure projected revenue.
Negative impact on unit revenue of 160 to 180 million euros. That appears to be the extent of the damage on Air France KLM.
And they've been struggling recently as well. They haven't had the transatlantic pickup that IAG has had. The advantage of that certainly seems to be sort of clear in the share price. Lufthansa and Air France both really struggling at the moment. Everything at the margin, that's certainly something that doesn't appear to help.
Yeah, well, so we're going to keep an eye on how it performs then at the Open after giving some of these warnings. Coming up, we're going to get your stocks to watch, including, of course, Air France, but Atos as well. After the French IT services company reaches a restructuring deal, giving creditors more control. The details coming up next. This is Bloomberg.
A forward-looking Fed would certainly have the possibility of a July cut on the table.
Bloomberg opinion column, Mohamed El-Arian there speaking to us on Friday, talking about that possibility of a rate cut. That is something that, of course, the equity market is keeping a very, very close eye on. Here's the other. In addition to all the geopolitical risk, there is still now the first trading day of the the second half of the year. What does that mean in terms of investors saying, well, maybe the rally's time is up? Here's one chart coming out of, well, I should say, inspired by Torsten Slok, the chief economist over Apollo Management, kind of pointing out that we're in a weird time frame. Let me walk you through it. We're comparing here the current market cap of the S&P 500 to their earnings potential. That white line is, of course, the market cap, and that blue line is the S&P as the earnings potential. And you can see they traditionally, at least in the last 10 years, have really traded in line until now. The gap getting wider and wider as we see that concentration risk, to the point that the gap is at its highest on record, going all the way back to the 90s. So even including in the dot-com bubble. Anna, that is just one reason people are saying maybe in the back half we see a bigger correction than we've seen.
Okay, and we certainly have some great voices coming up in the second half of the programme to talk stocks, and we will continue to do that. We can put questions around that subject to Bank of America Merrill Lynch joining us shortly. Let's think about where we are in these markets right now, though. 3 minutes on the markets, in fact, with Paul Dobson, our executive editor for Asia Markets, who joins us this morning. Paul, very good to see you. So we're waiting for the handover from Asia into the European trading day. The European day, then, really underscoring risk appetite today, attached to the French election, the outcome we know of just the first round. Do we think that this appetite for risk is sustained, or might it fade, I suppose, is one question as we wait for further clarity on round two?
Well, yeah, and it's an incredibly complicated set of variables here as well, Anna. We still don't know what the second round of the French vote is ultimately going to look like. But Macron must be hoping that he's a little bit like George Russell in the weekend's Grand Prix. You know, the two parties way out in front, a little bit like the race between Verstappen there and Lando. Maybe they'll take each other out to a certain extent and allow a kind of third way through where the centre manages to hold enough of the balance of power in the French Parliament. Markets can muddle through that there isn't that extremist on one side or the other that is going to drive markets too far off track. And what we're seeing today is some of that risk premium that had been priced into markets for the more extreme scenarios coming back out again. And therefore, the higher euro, the tighter spread, and the rally in French equities in particular. But it's not going to take all of those gains back in one day. It's certainly going to be a slow process first to get through the rest of this election and then to regain trust and rebuild trust, particularly in the bond market, which, when it has a knock like this, tends to take a little bit more time to regain confidence.
Paul, so uncertainty in France, but uncertainty in the United States as well. We're trying to figure out exactly what is going to happen. Is Joe Biden going to continue as the Democratic nominee? Is somebody else going to replace him? How do you price this? Has anybody figured out how to price this into market yet?
Well, I think that the strategists are starting to come out with their trade recommendations, at least, based on the premise that Trump scored a victory in the debate last week and is in the ascendancy now. So, for example, Morgan Stanley is out today saying Treasury yield curve steepness is the way to go. His immigration policies are likely to slow growth in the short term, which will allow the Fed to cut interest rates more, meaning lower short-term yields. But his policies on tariffs are likely to be inflationary, pushing up the back end of the yield curve and therefore giving that steepening. So that's the way that people are starting to think about it. What's the clever way to play this, assuming that Trump is looking pretty much like a certainty at this point.
Well, Paul, in that same vein, do you take duration risk right now?
Well, I mean, there's a lot of risks out there as well, aren't there? Particularly, I think there's that dislike because of those inflation risks that we're still seeing in the economy. And that's why the jobs numbers at the end of this week are going to be really important to pick up from what we have from the PCE last week, which showed that slowing. We'll be looking at the wage growth data as well as the headline number on jobs. If that continues to slow, it will allow the Fed to do that kind of more easy reduction of interest rates the way that it would want to do it, rather than having to slam on or having to hold out even longer. That's what we'll be watching for.
All right there. Paul Dobson, our executive editor for Asia Markets, joining us this morning. Talk a little bit how you price in that political risk. I want to get now to our stocks to watch. Joe Easton standing by from our equities team. Joe?
Morning, Kriti. So it could all be about those French stocks today with that big gain in the CAC 40 futures, almost 3%. That would be the biggest rise in around 18 months for those contracts. Now, much of the declines that we've seen over the past month has been concentrated in a few specific sectors. But here's the broader CAC 40. We can see it losing around 9% since this snap poll was announced, just showing what a shock that caused the market. But in terms of some specific stocks, we are keeping an eye on the banks, particularly the likes of Credit Ag and SocGen. We can see those massive declines there, 15% in Credit Ag and SocGen down 20% over the past month. Also keep an eye on the companies exposed to government contracts. Vinci is one of them, the airport operator, and also Edenred, the voucher company. All of those firms potentially could see a bit of a relief rally today. We'll be keeping a close eye on that market. I'm also watching Anglo American today. This is after a fire halted production at a mine over in Australia. This is a metallurgical mine, so it's coal that's used to make steel. Now, analysts over at Citi really negative on this, saying it accounts for around 3% of the group profit at Anglo. And importantly, this is one of the assets they're looking to sell following the collapse of that takeover by BHP. So this could potentially throw that into jeopardy. Now, this mine produces around 3.5 million tonnes of coal, so we can see it is a big producer for them. We're going to bring up the chart on Anglo and see how this has moved since those BHP talks did actually fall away. We can see it coming off the highs, but still actually holding on to some of those gains. We'll keep an eye to see if this has a negative impact this morning. Then finally, another French stock to watch it is Atos, the French software company. Now, they have done an agreement with their bond credit holders. The credit holders are going to pump around 2.9 billion euros worth of equity and also 1.8 billion euros worth of debt as well. This is taking the place of previous agreements to rescue the company after the talks with OnePoint and also Daniel Krzyzewski faded away. But this is another massive dilution for shareholders. They could potentially be left with nothing after this. And as we can see, analysts very bearish, 10 sells, not a single buy, but potentially that is big news for Atos this morning.
Thanks very much. Our equities reporter, Joe Easton, with the latest on some of the stocks that will be in focus. And he guides us rightly to the types of French stocks that might make up that big bounce in the CAC 40 that we should see this morning. So the French banks certainly in focus, and those infrastructure plays, all those businesses that have done well out of relationships with Emmanuel Macron and his government.
Do you buy the rally or do you sell the rally this morning? I think that's the question a lot of trading desks will be asking. This is an opportunity maybe to offload even more French stocks rather than an opportunity maybe to buy them. How long does the bounce last? I think it's the real trade this morning.
I want to see what happens to the luxury stocks. How many times have we had analysts come out and say there's actually no connection between the luxury stocks and what happens in French politics, and yet they trade in line with the entire benchmark? And I'm curious what that does in terms of being the heavyweights.
Interestingly, we're told in the same conversations that there is a link between tourism in France and and luxury stocks. And we've just seen that warning from Air France KLM, which might have people scratching their heads thinking, is the Paris Olympics not going to be so great for French tourism? A lot to come in the second hour of the programme then. Coming up, we will bring you the markets open. We'll bring you the opening trade, in fact. Futures are pointing higher this morning. A real focus on French stocks. Just how high will they bounce and for how long? This is Bloomberg.
Monday, the 1st of July, 2 minutes to go until the opening trade. Let's talk about the legacy of Friday and what that's going to tell us about where European stocks are going to open. Politics may have a bigger impact, but price this in as well. Basically, this is what happened with the European trade and the US trade Friday. Blue line's Europe, white line is the United States. We faded after the European close in the US markets Friday. What does that tell you? That tells you you're likely to see a fairly positive story coming out from here. That's going to give European equities another bit of a boost. But politics, Kriti, looks like it's the main driver this morning.
It absolutely does. What a good guess, Guy, that we might actually see some green on the screen. But to your point, it is a double tailwind, because look at what you are seeing, this massive just almost 3% rally you are seeing in futures. That is showing up in the Eurostoxx 50 futures move as well, higher by 1.7%. Even the FTSE 100 story is in the green, although, of course, underperforming. It is all about that French election. But remember, there's been such a big sell-off in French stocks going into this. Anna, it almost feels like we were due for this.
Yeah, we will certainly focus in on those French assets and the extent to which we see a rebound in those. Joe Easton rightly focusing our attention on the banking sector, some of those down by more than 14% just over the past month. Also, some of the infrastructure names in focus. Anglo-American in focus as well, the biggest metallurgical coal project they have in Australia. We saw a fire there on Saturday. It seems it's going to take some time, several months, in fact, to get that back online. Atos also in focus, guys. We focus on French assets, but this one for a different reason. It's agreeing a restructuring pact with creditors, converting nearly 3 billion euros worth of bonds into equity. Creditors also providing new debt. So one way or another, French assets in focus.
Absolutely. I have two questions going around my mind right now. How long does it take French stocks to open, and how high will they open? There it is, the opening trade. Let's talk about exactly where we are with European assets this morning. The number you really want to focus on is what is happening in France. What does the CAC 40 do first thing this morning? But as you can see, the early indications are that European equities are out of the gate with a positive tone. The FTSE 100 is up. The DAX is up by 0.2%. The Stock 600 may be giving you an early indication, because there'll be some French stocks in there as to how the French market is going to open. I suspect this morning, though, it could take a little while, maybe, for French equities to get going. So I'll park this graphic for now. Kriti, let's talk about what else we're seeing. We'll wait for those French stocks to get going.
Well, let's start with the FTSE then, because that's where we are seeing some green on the screen again as we wait for that liquidity to show up in the French markets. Right off the bat, we're seeing some of the commodity names rally, Anna. When you look at the index contributions, the likes of Shell, BP, for example, even Glencore is higher alongside some of the banks, HSBC, Barclays as well. These are the names that seem to be leading the rally in the UK, but it looks like we are starting to get some of the opening trades on the French index as well.
Yes, really interesting. You mentioned what's going on with energy names. I see the oil price is higher this morning, up by 0.7%, up by 0.75% at 85.64. Oil gains with a focus on China's economy and those geopolitical risks. So we'll certainly return to the China theme. It has perhaps been undermentioned by us in the past hour of the programme, but certainly we've had some growth data out from there. We don't yet have an open on the CAC 40. We do see the FTSE up by 0.7%. We see the German market up by 0.2%, but all of these feel to be something of a sideshow as we wait for the French stocks to get open this morning.
I can't see a trade on SocGen. I wonder whether it's just SocGen that is keeping us from opening this morning. I can see just about everything else on the CAC 40 trading, but it looks like the French market has yet to fully open because some of the big banks, we've yet to see a first trade going through on some of those.
Well, we're going to keep certainly an eye on that, but let's talk a little bit about just what one of our previous guests at the start of the show was talking about, Peter Dixon, really weighing in on what this relief rally may actually mean. Take a listen to what he had to say.
It's a bit of a relief rally in a sense because maybe Le Pen or the RN didn't do quite as well as many people expected. There's certainly talk now of the centrists and the left trying to do their best to block the RN out of the out of Parliament, which I suppose is going to give investors some hope. It's not necessarily good for French democracy, and of course I think that will cause bigger problems down the line. But in terms of where we are now, and in terms of what we've got to look forward to next week, I think markets are hoping that it will not be an RN-led government, and I think that's giving them some succor at the moment.
Peter Dixon, they're the head of EMEA Country Risk at Fitch Solutions. Speaking earlier in the program about what that policy story may actually look like, let's bring in another voice. Joining us now, Sebastian Radler, head of European Equity Strategy at Bank of America's Global Research. Sebastian, a pleasure to have you. Welcome to day one of the new show. We appreciate it.
Do you like it?
Yeah, that's the highlight.
Especially. We heard you were coming, so we bought a new table.
Are we all going to run around the table now?
You can do that if you like.
In the break.
New game.
Sebastian, we've seen a lot of green on the screen right out of the gates. At least we're still waiting for the French indices, but it looks like set up for a positive open. How long does that last?
Well, it really depends on what happens with the main story we've been discussing with Guy and Anna and you over the last couple of months, namely, how does the macro cycle hold up? We've seen some incipient weakness in the euro area. We see the US slowing. So if all you get is some relief on the political front and the macro cycle holding, then the markets can go back to the previous highs. If, on the other hand, we are very late cycle, the unemployment rate in the US is rising, then you have to restore a risk premium that is not in the price at the moment, and then you get another negative catalyst basically waiting around the corner.
Well, before we get into that negative catalyst, I just want to mention that the French index is officially open, higher by 2.6%. It looks like some of the individual movers as well. BNP Paribas, for example, some of the banks rising as much as 6%. SocGen, however, and Atos both halted at the open. Also mentioned
SocGen's open now.
Oh, SocGen's open now. My bad.
Up by 7.5%.
There it is. Okay, so the banks lifting the entire index higher on a sector basis. Sebastian, how do you play the banks?
Well, again, I think it depends on the outlook for the macro cycle. But before we go there, I want to say it's a great restart of the show with such a party. There's fireworks and basically we got everything we hoped for.
I'd like to say we planned it that way, but
you did that very well. Smoothly planned.
Emmanuel Macron helped us out a little bit.
There it is.
I think he cares a lot about the show, clearly. So on the outlook for the banks have really thrived over the last 3 years because you've seen bond yields rising sharply and risk premia, look at the high yield credit spread, going to all-time lows. If you want to have further upside for the banks, you have a story to tell of why bond yields will continue to rise or risk premia will continue to compress. And at these levels, it's very hard to see that. On the other hand, if the macro cycle weakens, central banks start cutting and some risk premium is restored, then this outperformance that you've seen over the last 3 to 4 years will start to roll over.
What is in the driving seat, Sebastian, for French assets into the weeks and months ahead? Because we're talking here about a very idiosyncratic French story, and then you're taking us back to the sort of bigger picture European backstory. And I wonder which will be in the driving seat. Will it be French politics that continues to drive the banks, the construction businesses that we see rebounding so strongly this morning?
I mean, I would make 2 points. First of all, the market is rallying today, but if we take a look at what has actually happened, it's very hard to sell this as good news. What you had is a scare and a sharp underperformance by the French index, not so much by the banks, but by French equity specifically. It's hard to argue that you got a good outcome. Maybe you block a majority by the hard right, but in the best case scenario you get a hung parliament that effectively means very little decision making, no ability to deal with a very wide budget deficit, and also the European integration story effectively put on hold. That is effectively the avoidance of a bad case scenario, but by no means a good case scenario. So I think to come back to your question, if the macro cycle rolls over, that's going to be center stage. If it's all about French politics, it's really about, there's no upside. It's really about having avoided the worst case.
And if the macro story rolls over, where does that rollover come from? Are you talking about the US and what happens to the US consumer and how that filters through into European stocks, or is it something more homegrown?
I think it's both, because in our understanding, and of course we've discussed it many times, the main driver of the macro cycle is monetary policy. It takes a while for this to feed through. Very interestingly, we've seen the European credit impulse, the euro area credit impulse, just turn negative again, and that suggests that you're now seeing both in Europe and the US, as this huge support from US fiscal stimulus last year is starting to wear off, you see this kind of sagging of the macro momentum, and we really have to see how far does that go. But with the unemployment rate so low and rising, it's not inconceivable that we're getting towards the end of the cycle, and of course that will then be the main story.
Why do I want to own European stocks when I can buy Nvidia?
I think you want to own European stocks if you think either the value trade is on, i.e. bond yields rise, or there's going to be a strong domestic growth outperformance in Europe and the US, but I think we'd be hard-pressed to believe in anything.
But I'm still going to underperform Nvidia. This is the problem that everybody's facing right now in their portfolios. You've got a small group of US stocks that are massively outperforming and basically skewing. You've either got it or you haven't in your portfolio. Does it really matter? If I don't own Nvidia, does it matter what I own? If I do own Nvidia, does the rest of my portfolio really do anything for me? This is the question that everybody's trying to figure out at the moment. And where does Europe fit into that narrative?
I mean, there really was a very plausible case being made for being long European equity. So
there was. That's in the past tense, though, isn't it?
For me, it's in the past tense. But if you look at our fund manager survey, it's a very prominent product we've got. And there are people saying, you're already seeing the signs of macro weakness in the US. You don't see it until very recently in Europe. US equities are very expensive. If you now get the growth leadership globally handed from an exhausted US to Europe and you're on very low valuations, isn't that the next leg of the trade? Now, personally, I don't believe in that story, but it is a story and it's a plausible take on the situation.
Okay. In order for... Let's talk therefore about what I do next. I've got a France that's probably going to struggle. I've got a Europe that by extension is likely to struggle as well. I'm trying to figure out what I do next. You don't believe in the narrative that Europe outperforms. What am I doing right now? Where am I putting my money?
And I'm basically saying you're at the top of the cycle. If you have a checklist for the top of the cycle, say unemployment rate at an all-time low, risk premium at an all-time low, US savings ratio at an all-time low, equities at an all-time high, cyclic at an all-time high.
You're telling me where not to put my money?
No, I'm telling you, this is a great environment, for bonds. If you get the macro cycle rolling over and inflation is clearly fading, and we have many teams at Bank of America, and that's the consensus across the board. There's a big rally in bonds. Secondly, gold has rallied, but would still do well if rates come down.
So the equity guy is telling me not to put money into equities.
And then if you want an equity story, so I don't lose that part of my job, there is a big opportunity in defensives. Look at staples in Europe. At a 12-year low, cheapest sector in the market, underperformed by 30%. If you have a relative value trade, you will look back at that and say that was a trading opportunity, entry opportunity of a lifetime.
So let's bring it back to where we started this conversation then. If you are this positive on bonds and saying that should be the move, I'm assuming globally, isn't there a positive read-through into the banking sector then, not just in France, but then broadly as well?
So there are basically two aspects. On a relative basis, whenever bond yields decline, so bonds do well, bond yields decline, banks always underperform. And currently their price relative is at a 5-year high. And then you say, okay, but in absolute terms, they might still do well, maybe slightly less well than the market overall. And then it really depends on, do bond yields fall and risk premiums stay where they are? Then all equities do well. But if central banks cut partly because the labor market rolls over, partly because the consumer is weakening, then risk premium may go up. And that's an environment where all equities do poorly, but banks would be underperforming.
So in this environment where we're talking about 1,000,001 tailwinds, you're talking about monetary policy driving it. We talked a lot about the geopolitics, talked about the U.S. Let's talk about China for a second. on Thursday, the EV tariffs on China kick in from the European Union if no 11th hour deal is actually made. We talk about Chinese consumer read-through into some of the luxury stocks. Do we pay more attention to China then as the next catalyst for what happens to European equities?
I don't think China will be a catalyst. Domestic demand is very weak. You already highlighted that consumer confidence is very, very low. You still have significant overhang from the property sector. It's unlikely to go away. I think the best thing that can be said about China, it's the only of the three major regions that doesn't have to digest this overhang from delayed impacts of monetary tightening. So on a relative basis, we think it will hold up better than, let's say, the US or the euro area. So on a relative basis, maybe you want to look at luxury stocks, who, of course, are a relative trade on China. But in absolute terms, I think it's really about the US, does the macro cycle hold up, and Europe, does the political cycle hold up? I think you're right not to have mentioned China. I think it is the least interesting of the stories right now.
Thank you. Thank you for justifying my oversight earlier. Sebastian, talking about inflation, and you said, I think, earlier that the inflation, inflation is clearly fading, and that does, disinflation has been a theme for some time, and now we get to arguing about just how low it gets before maybe it bounces again. I don't know. But I was interested, actually, we get European inflation data tomorrow, I think. I was interested in a piece by John Authers this morning where he's looking into the detail of what consumers think inflation is going to do over the next 4 or 5 years in the States. And actually, there's quite a lot of evidence that, sure, some people think it's coming down still, but a lot of people are so affected by the inflation story we've been seeing over the last few years. They're not watching our show every day, and they think that inflation is maybe going to be much higher over the next 5 years. I wonder how that comes back to haunt us.
Absolutely. And I would say, when I say inflation is fading, I want to admit it's a contested issue. There are some people who say, look, this is the 1970s, inflation dropped, and there are all these great charts on Twitter. And what we are saying is the best available framework that we have links inflation to supply chain stress. And ever since the inventory cycle rolled over in the middle of 2022, supply chain stress has been declining, and that suggests a continued disinflationary trend in Europe and the US. So what we are seeing on the macro front, and that's for us the most interesting story, even more interesting than European politics, there's a race on between the weakening of the macro cycle and the fading of inflation. If inflation fades first and the macro cycle holds up, then there's a near-term boost still to equities. But if both happens, that's A, very good for bonds, and B, a net negative for equities.
Talking about supply chains makes me think of freight rates, and I know that you were just recently looking at how they've actually been ticking up again.
And it makes me sound very excited.
Worryingly.
Freight rates have gone. Yeah, freight rates. Take a look at what a box out of Shanghai costs, and it's a lot. We're not all the way back to the pandemic levels, but we're getting up there.
What are you shipping from Shanghai?
That's a whole different story. There's a side hustle going on here. But I shouldn't be excited about China. If inflation does hold up, how big an effect? When are we going to see that effect into equities? When are we going to see US equities, which don't seem to care about anything right now, other than AI? When are we going to start seeing some of those effects showing up? If we don't get the rate cuts, if we don't get the benign outcome.
I think it really depends on the rate of change. So you've got a 2-by-2 matrix, the growth outcome and the inflation outcome, higher, lower for both. So the market is currently pricing for Goldilocks, which basically means growth stays strong and inflation fades. So if you go to the other box, which is the biggest concern that markets have, which is higher for longer, inflation rises again, maybe you price a scenario where no cuts are forthcoming and maybe the Fed hikes again. But we only have around one cut priced anyway for this year. So it's a little bit of an increase in the discount rate. Maybe the market goes down 2-3%. So I don't think there's really any delta. If you just get inflation basically not coming down, you're pricing out some cuts. The real delta from here is either if the risk premium gets massively compressed because you get a tech bubble and a productivity boom and you're replaying 2000, and that's really what our clients see as the main upside scenario, or you get basically the rollover in the macro cycle and the risk premium rises. So from here, I think inflation is exhausted as the main story. It's all about the risk premium.
When you walk into a meeting and sound bearish, do people believe you?
I think what people are saying, and that really, because we've been selling this story for a while, I'm always like bracing it. They go like, oh, this also. What people tell me is we have a lot of sympathy for this intellectually, but we're managing money day to day. So therefore, we don't quite know why everything is held up so well. But we have to basically dance as long as the music is still playing. But we're waiting for this scenario to materialize, and we're ready. But we can only put the trades on when we see clearer signs.
OK, there seems to be French music that's making the markets dance this morning. Sebastian, thank you very much. Sebastian Riedler, Head of European Equity Strategy at Bank of America Global Research. Let's get an update on where those French assets are moving this morning. The rally in French stocks, it kicked off 15 minutes ago, and Joe Easton has an update on how far we've come. Joe.
So the French assets really driving the story today, Anna. Looking across the stock 600, the top 30 gainers, pretty much all of them are in France. You can't find many stocks that aren't in France in those top leaders. We've brought up the banks here. SocGen gaining the most in 2 years today, rising 8% at the open, coming down slightly. But we've got Credit Ag as well, up almost 5% at the moment. But we've brought up some banks in other countries as well. Deutsche Bank and Santander, we can see those lenders gaining too. The sentiment feeding through into other countries this morning, not just France. But of course, the biggest movers are on the French markets. We brought up some of the stocks that we had in stocks to watch earlier as well, with the firms exposed to government contracts. Vinci, the airport company, NG, also the utility firm, and Edenred, the voucher firms. Those stocks all getting that boost, with Le Pen making smaller grounds than some people had predicted in those first round of voting. We've got Atos down the bottom, that restructuring announced with some of their creditors. Around €4 billion being pumped into the company, the French software firm that's been hit by those accounting issues over the past few years. Really needs that boost there. Here's Anglo-American declining. That was down as much as 4% at the open. A fire at a coal mine over in Australia over the weekend. Importantly, nobody was injured in the fire, but it is worth around 3% of the company's group profit, according to analysts at Citi. And as we mentioned earlier, they are looking to sell that asset as part of their restructuring following the fallout of the BHP attempted takeover. That stock coming down at the moment. Then we'll look at a couple of UK home builder stocks, because we did get some data earlier today showing house prices in the UK up once again, up around 1.5% over the past year, showing resilience in demand for UK homes. Of course, we've got the UK election coming up. Housing is a key focus of that, with Labour pledging to build around 1.5 million homes in their manifesto. But we're getting a boost ahead of that election following that Rightmove data, as I say, showing resilience in the UK housing market. A couple of morning calls to bring you back in UK real estate as well. We've got Land Security. This one is upgraded at HSBC as they see the benefits of falling yields coming into the real estate sector. That one gaining 2.9%. This is, of course, the office company with lots of offices around London, so that's a decent gainer on the UK market today. And one going the other way over in chemicals. This is Akzo Nobel, the maker of Dulux paint. Goldman Sachs downgrading this one, seeing some weakness in the DIY market, and also some raw material costs coming up as well. That one's declining 1% over in Amsterdam. Goldman Sachs downgrades Akzo Nobel this morning.
All right, Joe Easton from our equities team, we thank you so much for walking us through those initial moves when it comes to how this kind of French story is playing out in the markets. Guy, a check on your sensational six.
Well, there's a few French stocks in there, so let's talk about those. And LVMH front and centre this morning. It is having, as you can see, a very good day. But it's really the French banks that are driving the stock story higher in Paris. Schneider is up very nicely as well. Even Air France is tracking a little bit higher this morning.
It was a good day for that news.
It was. But if you take a look at the three-day chart, Thursday, Friday and Monday, you'll see that it hasn't filled the gap, basically, from the sell-off we saw at the get-go of trade on Friday morning, which was generated by that Barclays note. So, yes, it is higher, but not by much. So that's that's the narrative out of France this morning. Kriti wants to talk about banks this morning from a different way. We're going to be doing that in just a moment. We're going to be coming back talking about BBVA and talking about what is happening with this transaction that it is pushing forward. You've been speaking to the chairman, Carlos Torres. I'm really looking forward to hearing what he has to say. We'll do that in just a moment. This is Bloomberg.
Welcome back to the opening trade. We're about 22 minutes into today's session. You were seeing green across the screen, perhaps a relief rally, perhaps paring back some of the losses that we saw last week ahead of that geopolitical risk. But look, the party may stop, it may not stop. We don't know, because we still have that geopolitical risk overhang. We're going to keep you apprised of all the market moves. But in the meantime, I'm going to nerd out for a second, because I love that I can finally play my Spanish correspondent hat with pride on what is going to be potentially one of the biggest domestic deals in the last couple of decades for all of Europe. And of course, the largest European banking transaction this year. I am talking about BBVA's takeover bid for Sabadell, about a €10.5 billion transaction. Here's why it matters. This is really, really significant, again, in terms of the size of the deal, $10.5 billion, but also talking about the fact that Sabadell has already voted no on Friday. BBVA coming in and saying, look, we have an AGM. We're going to try to get our shareholders to approve what's going on with Sabadell. For an exchange, by the way, of about one new issue BBVA share for every 4.83 Sabadell shares. This, of course, comes on the fact that Sabadell thinks that offer price is way too low, and simply they're already planning buybacks and shareholder return. BBVA chairman Carlos Torres Vila spoke to Bloomberg and explained where the savings are coming from. 850 million euros, he says. Take a listen to the breakdown.
The bulk of the savings have to do with technology savings and overall general expenses. The banking sector is undergoing a process whereby, because of digital, because of the importance of cyber protection, availability needs, preventing data loss, data fraud, data theft, I should say, and meeting all the stringent requirements that the EBA puts on the banks. All of that, plus the data and AI wave that we're under, all of that increases the weight of technology, and technology is fixed cost. So by being larger, having larger scale, you can spread that fixed cost over a bigger business and therefore be more efficient.
Okay, so that's the kind of the industrial logic as you put these two companies together. Then they fit into what? What does the macro picture look like? Kind of why are they doing this deal now?
Well, he actually said they've tried to do this deal before back in 2020, and COVID ended up being the enemy. Their enemy was time. He said that's the biggest hurdle to it. But right now, the Spanish economy, the European economy is resilient. Remember, this is the second largest bank in Spain, trying to acquire the fourth largest bank, but it only works because the macro is in its favor. Take a listen to what he said about the Spanish economy.
Spain is set to grow at 2.5% this year, when Europe is growing 0.7%. Next year, 2.1%, when Europe is growing, we hope, 1.4%. So significantly higher rates of growth on the back of population growth, employment numbers, record level, tourist revenues are very strong, non-tourist exports, very strong. I could go on. Spain has really good performance on the macro level. Also, we're set to see credit increasing in penetration, credit penetration increasing after many years of deleveraging. Spain has deleveraged 35 percentage points in terms of the debt over GDP, both on the household level as well as on the corporate segment, etc. So Spain, very positive story.
So a very positive story. So we've underscored why he thinks the deal makes sense and the sort of Spanish macro themes. So what are the hurdles?
Well, he's got a couple of them. He's got the politics. He's got Pedro Sanchez, of course, the Prime Minister of Spain, not a fan of this. You also have the CNMC, the Antitrust Authority in Spain. It's basically saying if there's more consolidation when it comes to things like interest rate stories, there is going to be a ripple effect into the end consumer. In addition to the U.S. political story, he's saying U.S.-China tensions going to play into the Mexico story as well. They have a massive exposure. Almost half of their bank revenue comes from Mexico. We're going to have more on the markets next. Stick with us. This is Bloomberg.
In an unambiguous vote, the French people have demonstrated their desire to turn the page after 7 years of contemptuous and corrosive power.
In accordance with our principles and consistent positions in all previous elections, nowhere will we allow the national rally to prevail.
Some of the political reaction from the first round of voting after we saw that snap election called by Emmanuel Macron. I guess the only real takeaway from this weekend is that may have been something of a tactical error. French assets this morning are bouncing, but take a look at the slightly longer term since that election was called, and you may see a different picture. But this morning, we're certainly seeing French banks, some of the industrials, doing very, very well. The CAC 40 is up by 2.26%. But I urge you once again to take a look at the longer term story. Delphine Arnault, multi-asset and overlay portfolio manager at Edmond de Rothschild, joins us now from Paris. Delphine, thank you very much indeed for the time. The French markets, French assets seem to be bouncing this morning. Is that the right reaction?
Thank you for having me on stage in the middle of the road in front of the Parliament. Yeah, the market rebound is very strong this morning, and the word I heard the most this morning is the French expression "c'est compliqué." Actually, yes, it's complicated. It's a complicated election, but the result we had yesterday evening and during the night allow us to explain this rebound, because we can avoid certain scenarios we've drawn before the election, and we can explain this rebound.
Okay, so he didn't get the big win for the rally, and I think that seems to be what everybody's taking away from this morning. But if we do, so can I assume, therefore, that if Marine Le Pen does win next weekend, the French markets are going to be, the French assets are going to be in a much worse place? This morning we have uncertainty. It's complicated, as you say. But once we get clarity, what do you think is going to happen?
We already have a certain amount of clarity. First, the worst-case scenario can be avoided. The worst-case scenario for the markets was an absolute majority from the left union. This was a low probability, but high impact on the market because of high fiscal expenses. This scenario has been avoided, and it's a bad news avoided, so it can be a relief rally and a leading short squeeze in the French market. Another bad news that seems to be avoided is Rassemblement National, national rally, avoiding to the absolute majority also. It's not out of the table completely. The main the view will be will gain clarity at tomorrow at 6 when we have the final list for the second round. But this second worst case scenario has already been downturned before the election, because when they allied with the right party and Eric Ciotti, they reduced their expectations regarding the retirement reform. They wanted to come back at 60. This kind of fiscal expense was really downward before the election. So, and unfortunately for the market, there is a scenario that was rosy, that was the good scenario, which would have been like in Spain last summer. The presidential camp would expect, he would have liked to have a majority. This scenario would have been good for the market, but unfortunately, it's not, it seems a bit complicated for him to reach a majority. The agreement that they will reach until tomorrow at 6 will help us to know if another scenario comes to the table, which would be good in the short term, but awkward in the midterm. It's a gridlock scenario of a technical or broad majority, Republicans, left, center left, which would lead to more rational in terms of fiscal budgets. But also it should depend on the agreement reached tomorrow.
Well, Delphine, you talk a little bit about that pension reform and, of course, the core story of the deficit. Let's talk a little bit about one way to tackle it. Can you price in the risk of increased tax hikes or increased tax policy? Is that something that's even on the radar from an investment point of view?
The increase in tax rate, you can't really price the effects. It's a Keynesian program in an environment that doesn't need any Keynesian program, because currently we don't have a shortage of demand. We have still, after the COVID and the inflation crisis, we still have supply constraints. So we don't know really the effect neither of the tax increase and neither of the minimum wage at 160 and 600 euros. It will be a very Greek-like program when Tsipras came into the power, but then you're going to have a reality check. You have the fiscal budget that has to be voted in the autumn, and in the meantime, I think this kind of fiscal expenditure will have to pull back, because it's not really realistic. Our worst case scenario for really big fiscal expansion was 120 on the spread OAT and below 106 on euro dollars. And this is something we can avoid if we have a technical majority or a broad central majority. This is something that will not come up in the parliament.
Okay. So Delphine, so we avoid those outcomes from a market perspective. I was interested in what we heard from Gabriel Attal, who said, the far right is at the gates of power. Our objective is clear: to prevent the national rally from having an absolute majority. So now we see Macron's party and the far left in conversation. What should the market watch for in those conversations? What are we nervous about?
What are we nervous about? He said that he won't ally, Macron's party will not ally with all the left union, but the majority of the left union. And what's left aside, it's not the LFI, the far left, it's only the LFI with certain positions. And these positions are not about economics. These positions are about ideology, for instance, anti-Semitism, or things like that. And so in that case, the fear for the market is that there's a lot of LFI candidates joining to the parliament, not a very strong position on ideology, but very strong position on economics, and will block any decision in terms of fiscal budget reduction.
OK, Delphine, thank you very much. Thanks for your time. Delphine Arnault, multi-asset and overlay portfolio manager at Edmond de Rothschild. Delphine, thank you very much for that. Really interesting, Delphine, reminding us that tomorrow evening is when we will find out who exactly will be running in the second round, which will be useful for the markets. Let's stick with politics. Hungarian Prime Minister Viktor Orban has announced the formation of a political alliance with nationalist forces in Austria and the Czech Republic. The new group is seeking to become the largest right-wing grouping in the EU. Let's get some analysis. Joining us now for more, Bloomberg's from Bloomberg this morning, André Gergely. Thank you very much for being with us. So just how fractious has the relationship between Viktor Orban and the rest of the EU become?
Right, so Orban just really thrives on creating international tension because it suits him to keep Hungary in a constant campaign mode domestically and in this electoral base mobilized. So that's how he's been winning elections for the last decade and a half. And that's, as you say, has been kind of an overarching theme of his relationship with the EU. And in turn, the EU has kept pressure on him for eroding checks and balances and running Hungary sort of effectively as a one-party state recently. And that has caused delays in some of the most important initiatives in the EU and also NATO when it comes to assistance for Ukraine and NATO expansion.
OK. So we begin the 6-month rotating presidency with Hungary at the helm. The catchphrase we understand for this rotating presidency led by the Hungarians is making Europe great again, make Europe great again. How is this going to be achieved?
Yeah, so that slogan, of course, is a tribute to Orban's sort of personal ties to Donald Trump. And as you say, it signals a sort of hectic period ahead for the EU while Orban is at the helm of the bloc. And Hungarian officials have been quite notorious for vetoing those major deals in Ukraine, but also making even sort of basic diplomatic activity in the EU fairly difficult on a day-to-day basis. At the same time, the EU majority has often found ways to get around that and Orban's vetoes. So when Orban felt cornered, he sometimes just literally sort of shuffled out of the room and quietly let the others make decisions and sort of abstain.
Andras, thank you very much indeed. We're going to look forward to seeing exactly what this is going to mean. I suspect, as you say, it could be a bit of a bumpy ride. Andras Gögle joining us on the Hungarian presidency. What are we going to talk about next? We're going to talk about another presidency. The US President Joe Biden vowing to fight on for another 4-year term. We're going to get the latest on what could be an interesting week in US politics. This is Bloomberg.
Take to keep the world safe and free for the years ahead. Folks, I give you my word as a Biden, I would not be running again if I didn't believe with all my heart and soul I can do this job. Because quite frankly, the stakes are too high.
President Joe Biden there on his commitment to winning November's U.S. election, coming from his comments at a rally in, well, Raleigh, North Carolina, for some irony there. Let's bring in Bloomberg's Derek Wallbank, a longtime U.S. political watcher, joining us this morning. Derek, what do you make of all of this? I mean, it's really challenging, and the bar is very high for someone to do a swap like this. How much peril is the Democratic Party really in right now?
Well, I was thinking about how to respond to what I assumed that this question would be. And what I'm going to go with, we have a story on the Bloomberg right now and on the web by Justin Sink and Amanda Gordon. Let me read you verbatim their second paragraph. Quote, not my words, their words. Quote, the strategy will be remembered as a display of either remarkable foresight or incredible hubris. This is because Joe Biden right now is facing all sorts of whispers, speculation, rumors, a little bit of nudging here and there to really consider his position because of what was a very difficult first debate against Donald Trump, particularly the first 20 minutes of that. Now, the Biden White House has tried to come out and say, look, you know, don't just focus on that debate. As Kamala Harris, as vice president, said, I'm not focused on 90 minutes. I'm focused on, you know, what's been happening the last 3.5 years. Okay, fine. But there is a certain restiveness within the Democratic base. And we do have some polls showing. CBS News did a poll that showed somewhere in the order of 3/4 of voters thought that perhaps it was time to step aside, including nearly half of Democrats. So there is that pressure. The thing is, though, is that Biden has this nomination on lock if he wants it. He's got the vast majority of delegates to the convention. It's hard to push him out. It's hard to see a scenario where that could happen. And so if Biden is to step aside, it will be him that's doing it. And he has said forcefully that's not going to happen.
Derek, who is Joe Biden listening to right now?
I think he's listening to his family. I think he's listening to his wife, First Lady Jill Biden. He's got a couple of trusted advisors. He does have some people that he reads a lot who have actually suggested that he go, but some of his closest political friends, Jim Clyburn, I'm thinking of out of South Carolina, have stuck by him. And remember, Joe Biden is also a guy who, when he was campaigning for president 4 years ago, had some real stumbles out of the gate in that electoral process, had some people saying he ought to go. And he is a real big fan of the idea that people have underestimated him his entire political career. So it's not like Joe Biden has a large group of politicians that he listens to. In fact, he would say that some of his best political moments have come when he has ignored the Democratic crowd.
That's interesting in itself, isn't it? Derek, thank you very much. Bloomberg's Eric Wallbank with the latest on US politics. Plenty of politics on display this week. Let's get a quick update on what we expect will be in the mind of market participants this week. We'll start with the ECB's forum in Sintra, of course. We get plenty of data out this week, including ISM manufacturing from the US. CPI inflation on Tuesday from the Eurozone will be an interesting one to watch. We'll get the Fed's minutes that day, middle of the week as well. Thursday, we have no trading in the United States. We have a UK general election taking place. And on Friday, of course, the US jobs report. We'll talk about some of these data points perhaps in just a moment. But if I could just linger on the theme of UK politics, our colleague Ellen Milligan caught up over the weekend with the leader of the Labour Party, Sir Keir Starmer. He wants to be, of course, the Prime Minister in the UK. We'll see how the voting goes on Thursday. She caught up with him and she discussed with him a range of subjects from tax to growth. Let's listen to what he had to say about populism, though, because this is interesting, the extent to which the UK is perhaps going in a different direction from the dominant vibe we've seen in other parts of the world.
We've seen the rise of populism and nationalism across Europe, across America and other countries, and it is very important that we make the case that only progressive democratic parties in government have the answers to the challenges that are out there. I think there are more global challenges now than there have been for many years, whether that's conflict, whether that's poverty, whether that's climate, whether that's energy, you name it.
It's an interesting one, Guy, isn't it? He says that only progressives have the answers. That's his standpoint. Of course, somebody else is perhaps going to have more levers or more access to the levers of power in France than the progressives that he would like to see there. In the UK context, though, you could argue that maybe the UK has dabbled in a little bit of populism already and is backing away from that slightly, and that's what we're seeing now.
We're about to find out. In some ways, the interesting aspect of this election coming up is not how the Labour Party performs. It feels like, in some ways, the Labour Party is going to be a protest vote for many people because they want to get rid of the Tories. The interesting thing about this vote, I think, is going to be about how Reform does and whether or not that party at the right fringe in the UK has momentum. And if it does, that's going to be really interesting as we progress towards the next Parliament, not this one, the next Parliament, and what happens there. And I think if Starmer wants to head that off, the clearest way he can do that is by delivering growth to the UK economy. And that, I think, is where the real challenge is going to lie. How can his party, how can his policies develop more growth, given the relatively cautious approach he's taking in terms of policy thus far? This is what he had to say on growth.
Growth is the number one mission. That's why our manifesto is a plan for growth, for wealth creation, for making sure that we are better off. The ambition we've set ourselves is the highest sustained growth in the G7, sustained being an important word there. We're not just measuring on a sort of one-off, it's got to be sustained growth. I'm confident that we can get growth.
Confident we can get growth. How does he achieve that, I think, is going to be really interesting. And Dan Hansen and Anna Andrade have written a really interesting piece this morning talking about how you can change the fiscal rules in the UK and rewrite those rules to allow more spending, particularly when it comes to what happens with investment in infrastructure, particularly green infrastructure. So it's going to be really interesting to see, kind of, with a big majority, whether or not they do that and are able to maybe turn that into actually a higher growth rate. But it's a really big challenge.
We talk about, as well, as Anna was pointing out, this kind of move more towards the left in the context of so many other places in the world really shifting to the right. I thought it was interesting that even Keir Starmer, I think it was over the weekend or maybe at the end of last week, had also said we're actually not going to hike up taxes on things like banks, for example, where so many of the countries right now are talking about things like windfall taxes on the banks as well.
In that same conversation, I think that was with Ellen Milligan. Interesting, to your point, Guy, about where the growth comes from, the CBI saying today that the UK could get a £57 billion economic boost by going green. They're looking at the growth within the green part of the economy, saying business groups, saying that the green economy is growing at 9% a year. So trying to channel a bit more. The difficulty is they had that plan. They had to rip it up because there just isn't the money. There isn't the fiscal money. So how much they get the private sector on board with that will be crucial.
Okay, two things there. If they change the rules, there probably could be the money. There could be more money. Maybe not 28. We'll see. Maybe it's 20. the multiplier is really interesting. They think the multiplier, the crowding in effect from the private sector, could be really high, i.e. you put £1 in, you get £3 crowded in. The Dan Hansen and Andrade piece suggests that actually it's more like 50p. So the multiplier effect is not as great, but still there is some effect there that is going to come through into the economy. So spend more, get a crowding effect, get an infrastructure story that may be similar to what we're seeing in the United States.
Yeah, it's a multiplier effect, but it's also, I'm curious about the delays there, right? I mean, Anna Andrade on this program made the point so many times that the reaction function, especially when it comes to things like the BOE and monetary policy to the fiscal, is far more sensitive and far more immediate than you've seen in some
They have to come out of the gate really quickly to get this done.
We have a lot of other things to focus on this week. We have data out of the US. We'll end this week. It's going to be a long week. It'll feel every day. We'll feel it. We're going to get to Friday, and we're going to be waiting for the jobs report. We've had inflation data out of the US at the back end of last week. We'll get the Fed minutes in the middle of the week. We'll get a Eurozone inflation tomorrow. So there are data points to watch for. And for the moment, the French story really, continues to dominate.
What's the trade here? And I mean, it's because it feels like when the geopolitics are so uncertain, with euro-dollar, for example, I'm going to take an FX route on this, really hooked to what's going on in France, and we're not going to know, of course, until the weekend. On Friday, is euro-dollar then more susceptible to the U.S. payrolls report than anything else we've seen this week? I feel like that's going to be the question.
That's a really interesting question on kind of which side of that pair do we see the dominant force coming through. You get a big payroll report, you get a weak payroll report. There's concerns about what's happening in the labour market. That could have an effect. But do you want to hold the euro going into weekend when you don't know what is happening here? That feels like it's going to be potentially dollar positive.
It could be also a very juicy bet depending on how the French are end up in terms of their politics. I'd be curious to see how much of the hedging around the FX space happens on that Friday morning.
Yes, and I think also Tuesday, our guest was telling us Tuesday evening is when we get the details of those three-way runoffs. Where are they reduced to 2? And then you maybe get a better sense of where next weekend's election goes in France. Should we close out the show with a quick look at French assets? We're still up substantially, but not as much as we were, incidentally. 2% higher on the CAC 40. Actually, utilities, the French utilities, the best performing. Banks also doing well in construction.
OK, it's a bit of a short covering rally. Maybe it starts to fade. You get a little bit of better news. You maybe kind of close out some of those positions. That fades quite quickly. The biggest story to me this morning is out of France, and it's actually that people aren't going to the Olympics. That's the story from Air France KLM this morning, that they're seeing actually weakness in demand, which I find absolutely amazing. It's a weekend of sport as well. It's a week of sport coming up too.
Very much a week of sport. Kriti's not letting the Olympics put her off. In fact, that's part of the pull of going to Paris.
I'm going. I have to.
I want these people avoiding Paris because of the Olympics. I can reliably inform them that the Olympics is a great event. That is it for the opening trade. The first of the opening trade. The Pulse is up next. They'll continue to take you through these markets. This is Bloomberg.